Okay, well, let's take a look at the broad market here and maybe a one-week chart for the NASDAQ and the S&P 500. Last week, we did see selling in some of those AI leaders amid concerns over valuations in the sector. Our guest says that the current market dominance of the huge tech companies doesn't indicate that we're in a bubble, even though it may at times feel that way. Let's welcome Hatem Dhiab, Managing Partner at Gerber Kawasaki Wealth and Investment Management. Hatem, great to see you as ever. So you say it does feel a bit like a bubble with the massive market caps of these stocks, but you don't think we're there yet?
Yeah, good morning, Andrew. Good to see you. Absolutely. I think when you look at the Max 7 being basically a third of all market capitalization for the whole world and bigger than basically most of Europe and other continents, one can start to thinking, wow, there is a bubble. But the reality is the earnings power for these companies are just magnificent, and no pun intended there. And also, you're seeing that the Max 7 themselves have so much cash flow generated every quarter. Profits growing at 27%. On average for these companies. So really these numbers are magnificent. And throughout history, we've seen a lot of sectors dominating the market for long stretches. Think of transport or financials throughout the mid-century. And just simply because that's really where the most growth happens.
So you're not concerned in that sense. The massive spending, though, hundreds of billions of dollars on data centers and chips. How long will it take before corporate profits are big enough to justify those investments?
I think that's the trillion-dollar question, right? Like when do we see that ROI coming from those investments? What actually encourages me is that a lot of the spending is done from free cash flow. So a lot of these companies are generating a ton of cash flow and they're using it to build these really this new infrastructure or these railways to build the next future, or at least the next what we need to build the whole AI infrastructure that promise so many advantages to humanity in general. And I think if we continue to see that being funded by free cash flows and some of these strongest companies in the world, then I'm not too worried. The minute that we start seeing a lot of companies just issuing debt and being a little aggressive with their financing, then that's when someone should worry. But that's not where we are today.
I suppose the problem here, though, is that we just don't know if AI will really cut corporate profits, corporate expenses that much. Will it be that effective?
Well, I think, yeah, it's anecdotal right now because, you know, it's real. All we're seeing is what ChatGPT or some of the AI chatbots are doing for us, like helping us with, better emails and a lot of other stuff. But I think if you start thinking agents and efficiencies throughout the whole economy, and you start thinking about, a lot of companies are not hiring as much because they know that AI can help a lot of their customers, and there is a lot of ways that you can see that this new technology can help improve efficiency and productivity, and then when you start seeing that next 2 or 3 years, and I think the market is seeing that, that's where the hope lies, basically.
What trends emerge for you from the Mag 7 reports, particularly the so-called hyperscalers? I mean, it does look like the cloud growth is continuing.
For me, again, it's the CapEx, right? Like I think every Mag 7 has increased their capital expenditure to a tune of about $400 billion for all the Mag 7s. This is basically double of pre-EI numbers, right? So we know there's a ton of money being spent on this AI data center infrastructure, and I think that's going to continue for years until we see otherwise. So for us as investors, we are very encouraged by that because that's where the future lies.
Just turning to consumers, according to the University of Michigan survey, consumer sentiment is at near 3-year lows. It's interesting to see that, but the stock market near record highs.
Well, there is surely a bifurcation between what's happening in the stock market and the economy. I think you just spoke about the shutdown, right? Like they're canceling air flights here in the U.S. We have Thanksgiving coming up. Inflation is definitely still high, so there's a lot of spending that is not happening. So yeah, the consumer, at least on the lower end of things, is not doing too well. But also on the other side, people who have money invested in the stock market, so kind of on the higher end, they're doing really well, and that's where you're seeing most of the spending. So absolutely, and there's something to watch for, and you're seeing actually in the consumer stocks, right? Like all the consumer discretionary companies are not doing that well.
Speaking of the boom in spending on AI, apparently Taiwan Semi says it can't meet demand for devices, including stuff sold to NVIDIA.
100%. I mean, I think that NVIDIA doesn't have any issues selling its GPUs. I think the biggest constraint is energy and the infrastructure and regulation to be able to build all these data centers. So TSM, being the manufacturer of all these chips, will continue to have a ton of demand going forward, because simply we need to build so much compute over the next few years.
What about Tesla? Speaking of possible excesses, what did you think of that pay package for Elon Musk that could be worth $1 trillion US?
Yeah, I think you have to look beyond the headlines. Of course, $1 trillion sounds ridiculous in many ways, but the reality, the targets that Elon or Tesla has to achieve for him to reach that full pay package are massive. We're talking about $8.5 trillion market cap from today, so basically 6x where we are today, and plus $400 billion in profits, which is, they are at 14 billion right now. So they have to really execute big time. But I think more importantly, what we've seen here is that Tesla is really trying to change the narrative around it being a car company to more being an AI and robotics company. And that's really what the pay package kind of shows. I'm a bit skeptical, because I think there is a true brand damage that happened from Elon being in politics and a lot of stuff that he's doing on X. But I think that's why you have 75% of the people voting for it.
Yeah, sorry. Yeah, I think a lot of observers think that he should have stayed out of politics and not espoused right-wing candidates, etc. So what did you make of
the funny? Yeah, absolutely. But the funny part is, he backed Trump, but the first thing that Trump does is really removes the EV subsidies and credit. So it's been very detrimental actually to the EV kind of movement, unfortunately, and that doesn't make any sense to me.
What about the ambitious goal in robotics? When you see that, do you think there's any chance of them achieving this?
I mean, it's a hot conversation, right? Would you want to have a robot in your house? I mean, a lot of my friends say no. But also, I mean, I don't know, maybe in 20 years, I think we'll all have robots, and people will have relationships with robots and things like that. So it's really hard to see where the future lies. But I think what we know is Tesla has done a fantastic job in the past being a robotics company and being able to really adjust its manufacturing processes to build these cars at scale and things like that. So if Elon and Tesla can pull it off, they will. They are really one of the most amazing executing team in that sense. But I think I don't know where we're going as far as a human race,
You have a stock idea for us. Amphenol, the symbol is APH. What attracts you there?
Well, I think we've been loving this whole AI trade, and we've been in it for a long time. But the picks and shovels plays for us is really one of the biggest, the easiest kind of names to look at. With Amphenol, right? If you think about the new data centers, and we've, as I said, there's $400 billion basically in data center spend over the next few years from the big Mac 7. You have to basically have cable and data transfers, things like that. And Amphenol is a data connectivity company, so they make a lot of cables. And if you think about, for example, the Colossus data center from XAI, you need about 2,000 to 2,500 miles of cables, right?
Wow.
And Amphenol is basically a company that helps make these low latency, high reliability cables they've seen a tremendous growth based on this growth. So for us, this is just a picks and shovel play.
Hatem, always great hearing from you. Thanks very much.
Thank you.
Hatem Dhiab, managing partner at Gerber Kawasaki Wealth and Investment Management.